If you are trading without backtesting your strategy, you are actually gambling, not trading. Most traders blow accounts not because their strategy is actually bad, but because they never tested it properly. Now, I'll be teaching us the truth about backtesting strategy, how to build a winning forex strategy that can change your trading career. Watch this video to the end. It will blow your mind. Now, I will be showing you things that others don't want you to see on forex. In this video, I'm going to show you the exact step-by-step process I use to backtest my forex strategy, so you can find what actually works before risking your real money. Don't enter the forex market with your real money without watching this video. This is a must-watch video. Now, hey traders, I am Mr. Joshua. Welcome to my channel. I teach traders how to trade the smart way and turn their trading confusion into clarity. Now today, you will be learning how to backtest a forex strategy the right way, from setting up your chart to collecting and analyzing your data. Right now on the screen, you will discover that I'm trading. Trading around, I'm buying, and I'm going to be buying all the way up there. All the way up there. Now, this can take few days because CHF is not volatile. It can take few days, but I'm trading all the way up to this particular point. Now, this is a strategy that I've tested. That is why I'm confident that I'm trading up there. Now, if you stay on to the end, I will also show you how I use my backtesting data to improve my win rate by over 20%. Now, let's dive into what we have for today. Now, the first thing is that you need to pick your strategy and time frame. Now, we have different time frame in the forex market, and all these time frames comes with different strategy. Now, the strategy that you use on the 1 hour time frame should be different from the strategy that you apply on the 15 minutes time frame and also on the 1 minute time frame. Now, you need to choose your strategy and choose the time frame that works with the strategy. First, you decide what you are testing. It could be a moving average crossover, or support and resistance, or even a breakout, or demand and supply zone, or even the chart patterns, the structure of the market. Choose any of these, then you choose your time frame. For example, 1 hour, 15 minutes, 30 minutes, and stick to it. Consistency is actually the key to your progress in this kind of training. You need to be consistent, because if you get data from 1 hour and you test it, the next day you get data from another hour, from another minute instead of 1 hour, and test it, you might get different results. Now, after that, you have gotten your time and also time frame, and you have also gotten your strategy. The next thing you do, you need to scroll back in time. Now, on your chart, it can be your MT4, it can be your MT5, it can be your trading view. You have to scroll backward several months and even a year. Move forward candles by what? By candle. Making every valid trade setup that fits your strategy as a rule. You must be able to move backward. Now, for example, you move backward and backtest the strategy for weeks, for months, for test it by moving forward. For weeks, for months, you test that strategy until you verify it. Then you can be able to say that this strategy is what you can use. Now you move forward candle by candle, making every valid trade setup that fits your word, your rules. And remember, no skipping of any kind of chart. No skipping. Be honest to yourself, because this is your trading. This is your career. Be honest to yourself, because this data will reveal the truth about your strategy. If your strategy will work, this data will actually reveal the truth about it. And if it will not work, my friend, leave the strategy and look for another strategy, the one that works. The one that works. Now, after that you have done this, you need to record every trade. Now, for each trade, note down the entry price, the stop loss, the take profit, the result, either you win or you lose, and the risk reward ratio. Now, you can use the Excel sheet, you can use the Google sheet or any journal. Now, the goal of this is actually for you to see patterns that works and what does not work. I entered this because I saw a pattern that has been working for me for more than 7 good years. More than 7 good years. And that is why I entered the buy in this direction, because I saw what has been working for me. Now, after you have written that, you have written all of this, the record of every trade, the next thing is you're going to analyze your result. Guys, you analyze your result. Once you have tested at least 50 to 100 trade, now you need to calculate the win rate percentage. Analyze your result. By calculating the win rate percentage, the average risk reward ratio, where you took your take profit, where you took your stop loss. Now you need to analyze your average risk reward ratio. Then you look at the maximum drop down. Now, what if it did not go in your favor? You need to look for what? Maximum drop down. Now, this tells you if the system that you are trying to create is profitable over time and gives you confidence to trade what? Live account. If not, you can't have confidence for you to trade live account. In fact, you will be frustrated in order for you to leave trading entirely if it the maximum drop down is much. Now you are doing all these things so that the maximum drop down will not be much. If the maximum drop down is much, you forget about the strategy. The last is for you to refine and retest. You need to refine and retest. If your win rate is low or your drop down is too high, tweak one element in the strategy. Maybe your entry condition or your stop loss condition. Then backtest again. The goal is not perfection. The goal is consistency. In Forex, the goal is not perfection, because there is no perfect strategy in Forex. There is no perfect strategy in Forex. All of us have strategy that is consistent, strategy that is working, but that does not mean that it is a perfect strategy. Does not mean that it's a perfect strategy. It might go against you today, but still it remains your strategy, because tomorrow it will favor you. So stick to the plan, and these are the things that you can do in order for you to backtest your strategy. I take it over again through all those steps, the 5 steps that we have. I said number one, you need to pick your strategy and time frame. Pick your strategy and time frame. Number two, you need to scroll back in time and also forward in time, so that you will be able to backtest it. And you use trading view, or you use MetaTrader 4 or MetaTrader 5 for you to as an app for you to be able to test your strategy. Then you need to record every trade, your entry price, the stop loss, the take profit, your result, your risk to reward ratio, and then you analyze your result. You analyze the win rate percentage, the average range ratio, and then the maximum drop down. And then lastly, you refine and retest. Once you have done this, it means that you will be able to decide if your strategy is working perfectly or not, if your strategy is good or not. That is it. That is how real traders build tested data driven confidence. If this helped you, smash the like button, drop a comment with your favorite strategy, and subscribe for more step-by-step trading tutorial. Remember, confidence does not come from hoping your system works. It comes from proving it. See you in my next video, and I'll be teaching you demo versus live trading account, the real difference no one talk about. See you in the next video. Thank you for watching this video. Do like, share, comment, and subscribe to this channel for more information.